Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Tuesday, April the 6th, 2010. We're very bearish on this market, expecting a big move lower. I know that you might think the market's moving higher. I've got to be wrong here, but I'm going to show you something right quick. This is a chart of the Dow Jones Industrial Average, a 3-year chart. Each one of these candlesticks is a week. We keep looking at this chart. It's very important here. There's a lot of indicators here that are very bearish, and I'm going to point out one in particular for you today. Back in 2008, we had the overbought condition of the RSI, okay, where she hit 70 or higher. That's extremely overbought, and you need to be looking for a major pullback when you see that. The market at that point did pull back, but it didn't pull back very much before it bounced higher, and that right there is someone could argue if the market's moving higher, you're wrong. Like I'm saying again and again on these charts or these videos, just because the stock market moves higher doesn't mean that it's the true direction for the big money play. In this particular case, had you drawn a trend line from the previous high, you'll notice that the RSI begins to trend lower. The high points and the low points begin to move lower. That's the actual direction. Even though the price of the average is moving higher, it was a bearish divergence right there, and you needed to be watching the RSI and trusting the RSI above the price activity. Now you saw the same thing if you look down here. Right at the bottom where we bounced from, okay? And if you draw yourself some little lines, see where those points landed, the perfect bottom call right there, okay? You'll notice again the low here versus the low there was higher. Same time, price was lower. This is a bullish divergence, reverses to the upside, okay? Now we're coming back up over here. This was a touch of 70 line. We're now at 68.78 as of today, and this could, in fact, right now turn around on you and still be this move lower. Remember, I should be the other color though. Don't want to confuse anybody. There you go. Now you could call that and that, just like that. All right. Now you could actually not call this the top. You might actually press up a little 1.5 points higher into 70 and press a little bit higher, and then you would actually find your peak. But in any case, your upside is very limited here. You're pressing that glass ceiling, and I'm definitely going to be a bear here. I wouldn't buy this with anybody's money, much less my own. So as you can see right here, why I'm bearish. Okay, this is just my way of explaining to you what I'm thinking and why, basically. Okay, so I'm not going to call the exact day here. I'm going to keep watching this thing, but you're definitely looking for shorts as opposed to longs in this market. At least you should be, in my opinion. You'll also notice I could point out several other items as well. The buy volume fading quickly, okay, while this move continues to move higher. All right, that's a bearish divergence. But this one is showing you the volume of as an indicator. I'm sorry, you couldn't see that. Roll that back down. There you go. Volume fades as the price moves higher. That's a bearish divergence, but noted on the volume chart. Okay, this one is not as trustworthy as the RSI to me, but it's still a good indicator. You also notice if you scroll on down, you've got the overbought condition of the slow stotch. Now, again, right here, they can't hold that overbought condition for a while, so you need to, be watching that. But the thing to pay attention to is the low points. See, trending lower while price trends higher. Bearish divergence again. Lots of conditions here, lots of signals telling us to be looking for the big move lower, okay? You'll also notice that in the past I've talked about a technical trend that I call a bull trap. Well, this is it again, okay? She's moving higher, trending like this. That can stay that way for a while and you can keep moving higher, but proper growth looks like this. You have, let me just draw it, price will move higher, base, move higher, base, move higher. You've heard that statement, bulls take the stairs. Well, these are the stairs, and that's how they trend, okay? This is not doing that. This is just trending up here like this in this little channel. No pullbacks other than these little quick little pops there. Those are not consolidation points. Those are just quick little sellings. They quickly run back up and start to trend this high level again. I don't trust those moves. They need to, when you have a low, you've got a low here. Let me get rid of that. There you go. You've got a low point here. Another one here. Then again here, and again here. What you're developing there is a downtrend. Now you've bounced, okay, but you've not come back down to test a low. Without a test of a low, you don't know whether this is the true bottom. All right, so you've got to see a test of the low here, and then you would have the potential to say, okay, from this low point to, let's say there was a pullback to this area, to this low point is held, and we're moving higher again, then we'd know we have an uptrend. Without that, we have what is most likely just a fake move to the upside. You've seen it happen here in a smaller form, and then when it pulled back to test that low, it didn't hold, and it fell lower. All right. Then you started to move higher again here. When you pulled lower to test that low, didn't hold. Okay. Now we're moving higher, going to test the low. Hasn't done it yet. Hasn't done it yet. It's coming. And this indication up here, the RSI, is proof positive. It's coming. That's my analysis on the market. I'm very bearish. I'll bring up the NASDAQ chart tomorrow and show you what we look like on that. All in all, I think now is definitely time to be looking for shorts rather than longs. If you are long this market, I'd keep a really tight stop. I am not really expecting a breakout of this previous peak here, just under 1200. So if you hit 1200, that's going to definitely have gone further than I thought it would. You also notice we're hitting resistance of the 200. Well, in this chart, it's a 200-week moving average, and that's 11,133.20 as of today. Okay, so that's going to be some resistance right there. You're also going to have resistance here, and again here if you did break out, but I don't think you will. Now, one last item to remember if you haven't watched previous videos. Back in September of 1929, there was a major market sell-off. We all know that story. In 1930, we had a major market bounce from that sell-off, and we came within 30% of the previous high of 29. We've just done the exact same thing. Major sell-off here in 2008, bounce in 2009. We are now 30% from the previous high. Okay, this is 30% from this high. All right. It's a lot of information there, but it all tells you the same thing. Be very cautious this market. If you're not a Full Access member and you want to be one, go to our website, sign up, pay the $145 for the whole year, and you'll have access to my portfolio. You'll know what's in my portfolio, as well as where my entry point is, my exit point, my stop loss limits, every bit of information you need to know what I'm doing in this market. And they often say I'm often early, but I'm rarely wrong. Refer your friends. God bless. Enjoy the evening. I'll see you all tomorrow.